Happy Wednesday out there, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Wednesday, December 11th, 2024. As always, we'll start with the executive summary from today's leadoff morning note. If you would like to review the analysis supporting these conclusions, as well as what specific changes you need to make in your portfolio to remain on the right side of market risk, you need to be a client of 42 Macro. So today's key macro questions are: when will dollar strength become a headwind to U.S. assets? And when will sticky inflation become a headwind to all assets? Our answers are: with its economy in far worse shape and facing even larger tariff threats, Beijing would likely find just cause to devalue the yuan as much or more as it did during the prior Trump trade war over the coming year plus. Weakness in the Chinese yuan will likely weigh on the currencies of regional peers, as well as the currencies of China's key trading partners in Europe and Latin America. Too much dollar strength will force international investors to aggressively divest U.S. assets to preserve their ability to service and refinance dollar-denominated debt, much like what we experienced in the second half of 2015, 4Q 2018, March of 2020, and the first 3 quarters of 2022. The November U.S. CPI data were in line with our quantitatively driven and qualitatively driven expectations for continued inflation cycle upturn. We believe our sticky inflation theme is unlikely to cause problems for asset markets until the Fed ditches its asymmetrically dovish reaction function. That outcome is unlikely to occur until the Fed returns the policy rate closer to what it believes is a more neutral setting, which is roughly around 3% in the September dot plot, and until after it ends its balance sheet runoff program. That suggests a directionally hawkish shift in Fed policy may materially threaten the current risk-on condition of the market regime as soon as the second quarter, but not likely before that. Sticky inflation forcing the Fed to cease supporting the economy is in addition to other developing risks that every serious investor must consider heading into 2025. Refer to the left tail risk section of our December 2024 macro scouting report for more details. Transitioning to our 42 macro dashboard, as always, I'll wrap up with a question from our community. This one's regarding advice for FBTC proxy, Bitcoin ETF. It says, hi community, I use KISS to manage my family trust account. The problem is that the provider does not allow investments in cryptocurrencies or related equities. I'm searching for a good alternative to FBTC component of KISS. Ideas are most welcome. So, so clearly, obviously, if you're operating in a structure that prevents you from investing in the things that we're telling investors to invest in, then clearly this may not be the solution for you. But I'll say that a lot of our clients have found success using equity crypto proxies to manage their crypto exposure in accounts where they can access, crypto ETFs or cryptocurrency specifically. MSTR, for example, is one such stock. Obviously, MSTR has a much higher beta than Bitcoin itself. It's right around about 2, a beta of 2. So you would have to cut the MSTR position in half in order to mimic the same degree of exposure in Bitcoin. For instance, you would just divide whatever your target allocation for Bitcoin divided by that beta to achieve the appropriate position size appropriate position size in MSTR to proxy Bitcoin. I want to say others have used Coinbase as well. I think the ticker for that is COIN. There may be other ETFs as well, but obviously this is a challenge for certain investors who may be operating in legacy 401k programs, or in this particular case, trust account. But at the end of the day, I think it's most important is to find the proxies that work for you in your local jurisdiction. And I do mean local jurisdiction. We have clients in 80 countries around the world. So, we can't be too specific about taxes or product availability, because again, I wouldn't be able to publish research if I spent all day worrying about the tax implications for investors in 80 countries around the world and the product availability for investors in 80 countries around the world. We're really grateful to have clients in 80 countries around the world, but obviously, our job as macro risk managers is effectively timing markets to help clients maximize upside capture in bull markets and minimize downside capture in bear markets. And we're doing a fantastic job at that. And then obviously the onus is on the client to then take those signals and then implement them in their local jurisdiction with their own tax consequences in mind, and their own product availability in mind, and so on and so forth. So appreciate that. I appreciate our wonderful growing community of clients and our wonderful growing community of non-clients out there as well. We're getting a lot of traction and interaction with a lot of the content we've been putting out, and we're really grateful for that. So continue to like, subscribe, repost, all that good stuff. Helps us grow the business, helps us grow our reach, and most importantly, helps us grow the incredibly positive impact we are having on thousands of investors around the world and their families. At the end of the day, we only grow our business when folks choose to subscribe to 42 Macro, and more importantly, remain subscribed to 42 Macro, because as I said earlier or yesterday, 100% of our clients can cancel at any time without penalty. We're probably the only firm in what we do for a living. We're probably the only firm in the industry that has such a lax cancellation policy for two reasons. One, we want to align our incentives with the incentives of our clients. And number two, our stuff works. We don't expect to have a high degree of attrition because our clients stick around because they're satisfied, happy customers. Check out our testimonials page, our new testimonials page, which our team has done a fantastic job of producing. We just added this to our website, our new testimonials page. If you're kicking the tires on 42 Macro, a lot of bullish testimonials here that are essentially begging the question, what are you waiting on? And so, we'll see you inside of our client dashboard in the coming weeks and months at some point. So we appreciate you. Everyone have a wonderful day out there. Hopefully everyone's having a wonderful holiday season. We'll catch you back here tomorrow. Cheers.